Hey everyone, what's up? Guys, whenever you want to buy a new house or start a new business, you would require capital, right? Now you have several options. You can get a loan from the bank, or you can use your own saved money, or you might ask for help from the relatives too. Or you can use the combination of the respective financing options. But have you ever imagined what would a mutual fund do if it wants to start a new scheme? Or what happens when a mutual fund house wants to introduce a new scheme? So, whenever a mutual fund house wants to launch a new scheme, they come up with a public offering known as NFO. So, NFO helps mutual fund houses raise money for their new scheme. Guys, but it's also important for the investors to know that NFO is similar to IPO, but it's not an IPO. As for the IPO, at the time of listing, the higher demand might fetch you healthy listing gains, but it's not the case in NFO. The NAVs or the net asset value of mutual fund do not depend upon the supply and the demand of the NAV. Guys, we're having 4 NFOs this week: the FTBAF, the Sundaram Flexi Cap, WhiteOak Mid Cap, Navi India Manufacturing Index Fund. Guys, let's have a look at these NFOs one by one in this video. First, Franklin India Balanced Advantage Fund. The benchmark for this fund is the Nifty 50 Hybrid Composite Debt 50s to 50 Index. Fund managers are K. Rajasa, Umesh Sharma, Sachin Desai, Sandeep Manam. The minimum investment amount would be Rs 5,000 and any amount thereafter. The NFO open and close dates would be 16th August to 30th of August 2022. Let's talk about the fund now. So a balanced fund is a type of hybrid fund that normally invests in both equity and debt components. That means it provides the investor the growth of equity and downside protection of the debt. For the FTBAF fund, while investing in the equity part, the fund is allowed to invest across the market capitalizations without any constraints. While investing in the fixed income or the debt instruments, the fund would mainly invest in high quality instruments with AAA ratings. The fund can also use index futures mainly for rebalancing the portfolio and to reduce the risk. Now, how will the fund houses select the companies for their investment? So, the fund house will mainly follow their QGSV or Quality, Growth, Sustainability and Valuations model. Fund house would first filter the companies based on the qualitative parameters such as management, businesses, track record, etc. Then companies would be further filtered on their growth prospects like the scalability of the business, among other parameters. While talking about the risks, of course, the equity-related investments are vulnerable to market-related risk and market volatility, but to mitigate this risk, the fund also invests in debt instruments. This provides a downside risk to the overall portfolio. However, you need to understand that even investment in debt instruments has its own set of risks. Debt instruments are vulnerable to credit risks, changing interest rate, etc. Guys, in the table on the screen, you can now check the performance of some of the other schemes by Franklin India. Now on the table, you can see the education, the past experience and schemes under management of the fund managers K. Rajasa, Umesh Sharma, Sachin Desai and Mandeep Manan. Guys, the next NFO on our list is Sundaram Flexi Cap. So the benchmark for this fund is the Nifty 500 Tri. The fund managers are Sudhir Keria and Ravi Gopalakrishnan for equity portion and Dvijendra Srivastav for the fixed income portion. The minimum investment amount would be Rs 100 and any amount thereafter. The NFO open and close dates would be 16th of August to 30th of August 2022. Let's talk about the fund now. So this is a flexi cap fund that has the flexibility to not only invest across all the market caps and different sectors in the domestic markets, but also has a freedom to invest in the international equity market. Guys, there would be times when the large cap funds would have given superior returns. Of course, this won't be the case every year, as even large cap stocks are also vulnerable to stock market volatility. But at the same time, they are less risky compared to the small cap stocks. But that said, risk and returns go hand in hand. Small cap stocks might give you higher returns but are risky. As FlexiCap fund can invest across the market cap, it will provide a better investment choice for the fund manager. leading to diversification. Apart from this, the fund would dynamically invest across market caps depending on attractiveness and valuations, and also provide diversification across industries and sectors. While selecting the stocks, the fund would use the bottoms-up approach. From the vast pool of stocks available, the stocks will be selected on the basis of the proper business of the company, the value creation, the value migration, and emerging sectors. The main risks associated with the investments in equities include fluctuation in prices, as stock markets can be volatile and decline in response to political, regulatory, economic, market, and stock-specific development, etc. Guys, in the table on the screen, you can check the past performance of some of the other schemes by Sundaram Asset Management Company Limited. Guys, next in the table on the screen, you can check the education, the past experience, and total schemes under management of the fund managers of this fund, who are Ravi Gopalakrishnan, Dwijendra Srivastav, and Sudhir Kedia. Guys, the next NFO on our list is the Navi Nifty India Manufacturing Index Fund. The benchmark for this fund is Nifty India Manufacturing Index. The fund manager is Mr. Aditya Mulki. The minimum investment amount would be Rs 500 and any amount thereafter. The NFO open and close dates are 12th of August to 23rd of August 2022. So the Nifty India Manufacturing Index aims to track the performance of stocks that represent the manufacturing sector in India. It is a diversified index with maximum weightage of each stock capped at 5%. Apart from this, index also has minimum exposure of 20% to the sectors like capital goods and automobiles and auto components. Hence, it makes the index diversified not just across stocks but also across sectors. Guys, the manufacturing sector is also witnessing increased investment in recent years. Foreign direct investment, that is FDI, in the manufacturing industry increased by 25% in year 2021 according to Forbes India report. Apart from this, the government is also trying to boost the manufacturing industries through PLI schemes, Skill India, Make in India, and Startup India. Talking about the returns, as you can see on the screen, Nifty India Manufacturing Index has outperformed the Nifty 500 in 7 out of last 11 calendar years. Guys, as discussed, the maximum weightage of each stock is capped at 5%, and the top 10 stocks as per the weightage are as follows. For tracking the performance of this fund, one should not focus on beating the benchmark as it is an index fund. The aim should be of minimizing the tracking error. Tracking error is the difference in the returns created while tracking the benchmark index. Apart from this, guys, the index also faces micro risk associated with the manufacturing industry like inflation, economic slowdown, supply chain disruption, etc. It also has inherent risk associated with the investing in stocks like volatility. In the table on the screen now, you can check the performance of some of the other schemes by the Navi AMC Limited. Let's talk about now the education, past experience, and schemes under management of fund manager Aditya Mulki, which is on the screen. So now the next NFO on our list is the WhiteOak Mid Cap. Let's talk about the fund. The benchmark for this fund is the S&P BSE Mid Cap 150 Tri. The fund managers are Ramesh Mantri for the equity portion and Mr. Piyush Baranwal for the debt portion. The minimum investment amount would be Rs 500 and any amount thereafter. The NFO open and close dates are 16th of August to 30th of August 2022. Okay, let's first understand what is a mid-cap fund. So guys, a mid-cap fund is supposed to invest at least 65% of the total assets under management in mid-cap stocks. According to AMFI, in consultation with SEBI, companies, when arranged in increasing order of the market cap, the 101st company to the 250th company is considered as a mid-cap stock. The mid-cap stocks have a higher return tendency than large-cap stocks as they have more growth opportunities with them, but at the same time, they are riskier than large-cap stocks. Guys, the fund try to invest in the stocks based on business and management at attractive valuations. In the table on the screen now, you can check the performance of some of the other schemes by the WhiteOak Capital Fund House. Now, you can see the education, the past experience and schemes under management of our fund manager Piyush Baranwal and Ramesh Mantri. Let's get to the conclusion now. So guys, these were the 4 NFOs which would soon get closed. Please note that this is not a fund recommendation but purely for information purposes. If you want to invest, please go and do your own research, or you may consult a financial advisor too. Guys, if you like this video, please hit the like button and don't forget to share it, please. To receive more updates related to the mutual funds, please do not forget to subscribe to the Groww channel. Bye-bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.